Florida real estate is at a turning point with record highs, then a market cool down, and then insurance chaos. What is next in 2026? I'm going to talk about prices, inventory, interest rates, and so much more in this video. Hi, I'm Ryan Zakos. I was born and raised right here in Sarasota, Florida. I'm your relocation expert here in the Gulf Coast, and I help people make safe, smart, informed decisions in their relocation journey here to Florida every single day. I serve people in Sarasota, Bradenton, Lakewood Ranch, Venice, Wellen Park, and well beyond. Before we dive into the video, please check out our website, zakosre.com. There's the link in the description below. We have some free guides and some amazing resources on our website that you can easily download, and it'll be a great place to start in your relocation journey. In this video, what I'm gonna do is I'm gonna start by framing it based off of 2025. What has been the trend in 2025? What have we seen kind of year to date? And then how is that going to shape the outlook in 2026? I'm not going to look at just what my thoughts are, but I'm actually going to look at stats, data, and a lot of very well-respected resources to get these predictions for 2026. So let's dive in. All right, so first, 2025, where do we stand now? For pricing in 2025, the median home price in the state of Florida is $410,000, and in July, it was down about 1.7%. That has kind of been the trend for the whole entire 2025, a slow tick down in year-over-year numbers. Now, for the condo market, it's drastically different. After that condo reform and the legislature pushed down from the state on the condo side, we have seen probably what some would consider a condo recession. We are down about almost 7% in the condo and townhome market in the state of Florida. Obviously, this varies whether you're inland, whether you're on the coast, the type of condo, the age of the condo, all that stuff matters, and also matters on the single family home side. Now, like Sarasota, Manatee County, where the state average is down 1.7% of single family homes, Sarasota, Manatee County, we're about 1.2% down. But even within the county itself, you will see communities that are up year over year. You will see other communities that are down 8% year over year or 10% year over year. So it really is dependent, and it gets a lot more variables as you start narrowing down that market. So again, this is why you need to work with a local expert in the area that you're looking to relocate to, because they can help guide your decisions and what communities are hot. And this is going to be the same thing for not just the pricing, but inventory, because we know in real estate that supply and demand ultimately lead to that pricing. So that's how the pricing has looked in 2025. Even in 2024, we saw that slow trend down, and that has stayed consistent. It's just been a slow trickle down and a softening of the market. Now, as for inventory, statewide, we're seeing about 5 to 6 months of supply in housing. Now, a lot of real estate professionals will say that 6 months of inventory is a balanced market. I don't necessarily agree with that statement. Based on my experience of doing this for 10 plus years, that about 4.5 months of inventory is where we kind of start seeing that teeter from a seller's market to a buyer's market. We've been seeing that 4.5 months of inventory sitting at that number and a little bit slowly trickling up now for over a year statewide. Again, this varies drastically in the local market. So as you get more localized, there might be an area like here where I'm sitting here in my office on Venice Island that doesn't have nearly the months of supply. So therefore the prices have held, and the lack of supply has led to a stronger market regarding the pricing side. The same thing happens on the other end of the spectrum. So there might be communities in less desirable areas that have seen a greater hit on the pricing because of the supply has been so high. I did a crash video recently on the channel, so check that out. But I talked about different counties that were being affected the most here in the state of Florida. A lot of that is because of the stacking of inventory, and a lot of that is new construction inventory, right? But as a whole, we're looking at 5 to 6 months of inventory, and that's kind of steady county to county. It seems like it's not that far off that number. Now for rents, $2,400 is the number for monthly rent currently as a median or average in the state of Florida. And that is actually down year over year as well. We're seeing a softening in the rental market. And that is probably because the multifamily oversupply is easing the demand pressure on the rental market. Now, as for insurance, you probably do not know the back history of why insurance has become such an issue here in the state of Florida. Well, in 2023, the state actually put a law into place where policyholders could not recoup their attorney fees in a litigation against their insurance providers. So prior to 2023 in the state of Florida, we had a lot of storm chasers, roof companies, things like that were going out and they were trying to get free roofs to these policyholders. And if they weren't able to, they were just suing the insurance providers and getting those. Now, as part of those lawsuits, those fees were recovered. Those attorney fees were actually recovered as part of the lawsuits. So basically, because there was so much litigation, Florida was the highest litigated insurance state in the whole entire country. And so there was a problem with that. And so the state stepped in and said, we are not going to allow the attorney fees to be recouped. And because that pressure on the policyholders, that has reduced the litigation here in the state of Florida dramatically in the last 2 years. This has actually led to, back in 2023, Citizens, which is actually a state-provided nonprofit insurance institution that is supposed to be the last resort for insurance providers if you cannot get a policy anywhere. There's over 1.4 million policies held by Citizens in 2023. As of this year, mid-2025, Citizen only holds about 778,000 policies. So we're seeing about half the policies being taken off the burden of Citizens, which means that there's a lot more private insurance companies coming back into the market. So being that Florida was so highly litigated, a lot of insurance companies were like, I don't even want to offer insurance in the state of Florida because there's a great probability that I'm going to get sued, and I don't want to get sued and have to provide free roofs and whatever else. So I'm just not going to offer policies in the state of Florida. Since this law went into effect in 2023, a lot of these providers have come back into the state. Now, that doesn't mean that we're seeing a really heavily decrease in insurance costs at this point, but this will lead into the forecast for insurance in 2026 and stuff. I do think as private insurance policies do come back into Florida, we will start seeing a softening of this insurance pricing and the premiums and deductibles and things like that here in the state. So I'm looking forward to that. I think everyone else is looking for that in the state. And it's still very fresh and very new. We're just talking 2 years ago. So it's taking a while for this litigation to actually weed itself out and for insurance providers to come back into the state. But we are starting to see this and the results are there. So that is how insurance looks right now in 25. And then we'll talk about that here in 2026 in a second. Now for migration, net migration was crazy, obviously, from 2020 to 2023. We're seeing almost 500,000 people come into the state every single year. For the last year now in 2024, it actually has slowed. We're under 100,000 people in net migration in 2024. That has also helped on the pricing side, right? With all this influx of people, it's created tons of demand and obviously inflated prices dramatically. So with that net migration lowering a little bit, which, side note, it is still the number one net migration state in the United States. So people are still choosing Florida and people are still coming here and they will forever. The reality is that pressure has eased up a little bit, which has allowed inventory to come up a little bit, which has allowed prices to come down a little bit. So that all kind of obviously makes sense for 2025 and what has happened. Now, overall, what is happening or what's going to happen in 2026? As for mortgage rates, the Fannie Mae is predicting that in 2026, we will see interest rates hover around 6%. The MBA is saying about 6.4%. It seems like everyone that I'm talking to, and my prediction is that the Fannie Mae number is probably what everyone's shooting for. People are thinking that we could actually even be right around that 6% number by the end of this year. So if that's the case, hopefully we'll see a little bit more buyer demand come in, but I do think it's going to level off. I'm hoping around that 6 number, which is actually really encouraging because with seller concessions and buy downs, you're able to easily then get into the 5s and that will help your overall monthly payment. In fact, with a lot of these people that we're putting and buyers are putting under contract right now, whether it's a new construction or resale, that is a huge factor of negotiation is the seller concession cash, which we're using for buy downs. Ultimately, it's about your monthly payment for a lot of people. They know they're going to be living in these homes for a couple of years. So they want to get that monthly payment as low as possible. A way to do that, obviously, is instead of reducing the purchase price of the home, is take that cash, buy down that interest rate, and it'll actually be a little bit more bang for your buck and the better use of that money instead of just lowering that top line number. So that is something that we're helping buyers navigate, and we're able to see $10,000 plus in seller concession, which is really helping the interest rates. The takeaway would be expect gradual relief. Definitely not a mortgage rate, interest rate crash. And the payment relief won't come from the interest rate itself, but from the seller concessions and buy downs. That's for interest rates in 2026. As for home prices, overall, I think that we will see this leveling off of home prices. I think we're going to see a great variance depending on the actual area in which you're looking. So that's why you need a local professional. I talked about that in 2025 numbers, but in 2026 numbers, this is why you're going to need someone that actually knows how to navigate each and every individual neighborhood. I think that in some areas and some communities, we'll see a flattening of prices. Some areas and communities we'll see a lowering of prices. We're going to see a steady decline, a little bit of softening still into 2026. And then other communities like these amenity-rich new construction communities, I think they're very sticky. I think a lot of people are intrigued and they love these communities, and that's actually going to help hold those prices in those communities. Now, I do think there's other communities that are very desirable because they have area amenities. They are newer construction, great geography. There's going to be specific communities that I think because of the lack of inventory will actually see maybe a slight increase of prices in 2026, which actually will be a big change because that has been rare over the last 2 years. So I think there will be communities with a slight increase. Some communities are going to be very flat. I like these amenity-rich new construction communities. I think that they're going to be sticky. I think they're going to be pretty flat for 2026. And then I do think that they're going to see some outlier areas, some areas where maybe new construction builders came in that weren't fully developed yet there. They weren't fully amenitized. And so we might actually see a little bit of a decrease because of the oversupply of new construction. So that's my take on the home prices for 2026. Now for inventory, builders have slowed, but they're still delivering. There was obviously a huge influx of building in that 2021 to 2023. But they have recognized that the demand isn't there, so they've pulled back, which has now led to a balanced supply in the new construction market. They're still weeding out a little bit of inventory, but overall they've slowed, which is probably a good thing because we don't want to see, obviously, the month's supply get over 6 months. That's a take on that. So expect more choices, expect stronger incentives, and expect new phases as these new construction communities get smarter and better into 2026. I do think that we might see some inventory stack on some of these older resale communities where the homes are not updated. So I think resale homes must compete on condition, insurance risk, and lot quality. So those are the things that people are holding to high regard in these resale communities. And some of these that don't meet those factors will actually see a continued lowering and softening of prices. So that's my take on pricing and inventory. Now for insurance and risk. We talked about the back of insurance from 2023 to 2025 and what that outlook looks like. With these state reforms, private carriers are continuing to come back into the market, which only helps. Obviously, with more competition out there, we'll see a lowering of price. So right now in 2025, we've seen a stabilization of insurance prices, which has been refreshing. But I hope in 2026, we'll actually start seeing these more privatized carriers coming into the market and allowing us to go back and reprice these insurance products that we might have and actually get a reduction in some of these insurance costs. But you have to recognize as a buyer that you need to budget based off of roof age, wind mitigation, and elevation. So those are 3 things that are super important in your insurance costs. Obviously, you can get more coastal and you might have some wind factor and stuff like that, but definitely look at your roof age, elevation, and then your wind mitigation credits. So do you have hurricane shutters or do you have impact glass? Those all help your insurance premiums significantly here in the state of Florida. Now, as for migration and demand, I think we'll see very similar numbers to 2025, 2024, where the net migration has cooled, it has stabilized, and we're not going to see this massive influx like we saw again post-pandemic. So I think that those numbers are over. I think that Florida is still very desirable, especially certain areas of Florida. Like where I live, I think this is one of the best places. I'm obviously biased, but one of the best places to live in the state of Florida. And so will always see a positive net migration to places like this in the state of Florida. It just won't be a frenzy like it has been in the past. We're still continuing to see tons of retirees. So as people are retiring, they're looking for a warmer climate where they can work and live and play, do sports outdoors year round. This area also has been great benefactor to people that are working from home. So there's tons of young professionals, young families that are moving here because of our school zones are great, but also because they have the opportunity to work remote. I'm helping a couple buyers right now relocate to the area that are young professionals that are from larger metro areas that are relocating here because they're ability to work from home and they want to take advantage of that and live in an area that's obviously enjoyable with a lifestyle and culture, but also a good place to raise a family as well. So that's been a huge contributor to the growth of especially this area in Florida, but Florida as a whole. So that's the migration and demand there. Now let's talk about the rent and investment outlook for 2026. Rents are plateauing and cap rate is stabilizing. Obviously, there was a oversupply of this multi-family concept in the state of Florida as a whole with that frenzy of people relocating here. So now that there is an oversupply, the rents have plateaued and even ticked down a little bit, which has been a great ease for people that are looking to rent and made rent more affordable here in the state of Florida. And now investors are having to rewrite HOA, CDD, which is obviously part of your tax bill for new construction. That's something that investors weren't taking into consideration. Taxes, insurance, HOA, all these things are going into their monthly, which is pricing out some investors with the pricing. So investors are being very cautious, very careful, and they're being very choosy on where they're investing because the cost to carry these homes risen significantly. So that's why the cap rate is stabilizing and rents are plateauing or even dipping a little bit. So that's kind of the rental outlook. I don't see that changing in 2026 with the prices and inventory and everything else going where we just talked about in 2026. I think the rental market should soften a little bit still, and then investment opportunities will be softer as well until we start seeing interest rates lower, we start seeing insurance rates come lower and stuff like that. So will be kind of the outlook for 2026. So the local lens, I want to give you a quick local lens for Sarasota, Manatee County. Lakewood Ranch, there's new phases of new construction. So there's wonderful new incentive opportunities for new construction. The geography is spectacular. So Lakewood Ranch is continuing to be a draw. There's these new construction pockets that there's some crazy incentives and awesome incentives that the builders are offering. But then there's some amazing resale opportunities in these newer construction communities. They're not new construction, but they're newer construction. I like the newer construction communities because they offer maturity, wonderful landscaping, and better geography than some of these outlying Lakewood Ranch areas. And you also get the benefit of some of the insurance breaks, wind mitigation, stuff like that, because they are newer construction communities. So we'd love to help you and guide you in what that might look like. The same can be said for like East Sarasota communities. There's some wonderful newer construction communities in East Sarasota, new construction pockets in East Sarasota, and then you can work your way south into Nokomis, North Venice, and then down even to Wellen Park, Inglewood. Like one of my favorite communities, I was just there today, is Beach Walk, Devasta community that's sitting 2 miles to the beach. That's all new construction opportunities. So that's kind of the outlook. I don't see anything changing much for 2026. I kind of see same of the same old, a lot of the same old and what's happened in 2025. I do think that we might actually see in some of these communities a slow tick up based off of supply and demand for some of these really desirable communities here on the Gulf Coast of Florida. So that's kind of the local lens of what that looks like locally from my perspective. And then what should buyers and sellers do with this information? If you're a buyer, number one, target motivated resale opportunities. Make sure that these resale opportunities have new roofs and wonderful wind mitigation credits, which will definitely ease your insurance costs. So that's number one. Number two, seller concessions to buy down your rates. Again, I just was negotiating a deal yesterday or 2 days ago for $15,000 in seller concession. We actually got money off the purchase price as well as a $15,000 seller concession that we're able to buy down a rate to a really good number, which is actually saving them a lot more money than if they would just apply that $15,000 off the top of the purchase price. So look and play with numbers to make sure that it makes sense for you, but that's one creative way, is to buy down rates with the seller's money. 3, balance geography with build age. Now, new construction is very desirable, always be very desirable, and it has wonderful insurance rates, wonderful gated amenity-rich communities that to choose from. So don't forego those opportunities. But balance the geography. If I'm you and I want to be protectant of my investment, I want to balance the geography with the build age to make sure I'm checking all those boxes. So Those are the three things that I would do if I'm a buyer. Now, if you're a seller, three things I would do is pre-list with your insurance docs. This is absolutely so important in this market for buyers. So what are your wind mitigation credits? What are your insurance premiums? Do you have flood insurance? Is it transferable? These are things that I'm going to ask in helping you relocate here. So if I'm helping a seller, which we are, I am asking them to provide that information up front so it makes everyone more comfortable, and it's actually a selling point to your homes. If your home happens to be in a flood zone and you have an insurance premium of $900, which is actually something I'm negotiating right now, provide that up front, because it's actually more desirable to provide it up front, where it's like, oh, the insurance premium is like $900 a year. It is transferable, so you can assume that policy. And it's something that if you were to shop for right now, it would be a lot more. So it's a good opportunity. It's in a low risk flood zone. So, if we provide these informations up front, especially as wind mitigation, if you have a new roof and hurricane glass or hurricane shutters, if you provide your insurance rates and your wind mitigation credits, this will help make your home more marketable. Number two, price relative to new construction and not just comps. A lot of people make the mistake of listing their home based off comparables in their neighborhood, but don't look at the comparables of new construction in the area. A lot of people are choosing new construction, so you have to price your home accordingly to what the buyer pool is shopping for in your area. Number three, offer targeted seller concessions or credits. This obviously can help aid the burden of closing costs, HOA prepaids, or whatever it may be. But a big one, obviously, in this market are interest rate buy downs. So if you offer this up front, it eases that burden, it helps in negotiation, but it also makes them think creatively that, oh, I wonder with that $15,000 credit they're offering, if what my rate could be and then what my monthly could turn to. So this is a marketing strategy that could be very helpful to a seller in navigating a little bit tougher of a market. So my take as a whole is 2026 won't be a repeat of either the frenzy or the cool down. It is shaping up as a buyer opportunity in the right pockets and a strategic year for sellers who prepare and market and list their home properly. Before you go, check out the link in the description, grab a free guide. We have an area quiz as well that would help you in navigating this Gulf Coast of Florida. And I would love to be a resource for you. So feel free to call, text, email, shoot a comment below if you agree or disagree, or your thoughts on what you think 2026 is going to shape out to be. Look forward to chatting with you soon. Again, call, text, email. Would love to be a resource for you. Thanks for watching.